All right, Mari. Hmm. Say it again. Okay. All right, all right, all right. Let's start this video. I don't like these controls. All right, all right. Welcome, welcome. How am I? Can you guys hear me? Let me know if I'm coming through clearly. Jalen says she cannot hear. How about you, Lakeisha? Can you hear? Jalen, I'm not sure what's going on with your. We are waiting on Jalen to see if you will be able to get audio.
I'm about to go in there and help her.
Thank you. Are you able to see the screen? Am I sharing the screen?
Yes.
All right. And we're just giving it a few moments for Jalen to.
That Jay good.
She can hear now. All right, I'm getting a little feedback on my
I
end.
know. I'm gonna turn my. I'm gonna stay with Jalen.
You're staying with Jalen, so Jalen
Yeah,
is.
because you have that speaker on. That's why you're getting that feedback.
No, it's because this at first.
Yeah, because yours is not giving me feedback.
Okay.
It's
Well, look,
only
I'm gonna
Jalen.
go downstairs.
All right, go. We are family, so let's do this. I feel like if we are going to start off wealth elevation, who better than to start it off than my family? So I think it's just something that will be beneficial for us all. One day you guys may be able to buy your daddy that Ferrari that he wants. And the first step is going to be stock investing 101. So just tell you a little bit about myself, who I am. I have been in the financial service industry for 20 years. 15 of those years, I was a Series 7 registered representative. Series 7 is what allows you to be able to speak on stocks. That test is something that you would have to take. About 65% of the people who take that test pass that test on the first time. So do the math and you see it's not an easy test. 7 of those years, I was a registered investment advisor. So that I was licensed to sell stocks and to advise people on the purchase and selling of those stocks. You can also see that I have 10 years of life insurance license, and that allowed me to sell variable annuities. Annuities are something that are based on insurance products, so you need those licenses to do that. But this has been a long time coming for me to be able to explain this to you. I've counseled thousands of people through the years, and I remember counseling a guy who was a rocket scientist, and he said, this ain't rocket science. He was like, because I'm a rocket scientist, and I know rocket science, but I have no idea what this is as far as an investing. So I have a unique ability of being able to explain it, break it down so that you can understand it or anyone can understand it. And, it's not really as hard as people make it seem. So the facts, if we look at it, we got 33.5% black households owned stocks in 2019. And that's lower looking at 2020 because of how the stock market and Corona, had an impact on it and people withdrew their money, although the stock market went right back up. But people have a tendency to take the money out when it looks like times are getting tough. 65% of white families have at least one retirement account compared to 44% of black families and just 28% of Hispanic families. And typically, black families have less than $13 in wealth for every $100 held by a typical white family. So, the fact is, we've lacked opportunity to build wealth. Part of that is having jobs that don't offer a 401k. The other part of that is having jobs that may have smaller amounts of income. So, and then there's this myth that it takes a lot of money to invest in the stock market. And that's another reason why we're here. It's because we want to break that myth that it takes this tremendous amount of money that you need so that you can invest. And we also want to promote investing in stocks because, you can invest in the bank and get 1% interest, which, you can put it in your mattress and it'll be safe. But stock market generally gives you a better return on your money, and it can help your money grow more than just sitting in the bank or under your mattress. So for instance, let's take a look. So in 20 years, so everybody looks like you're pretty young here. So in 20 years, this is what we could take a look at. So if you had $25 and you were investing every month for 20 years, you put in $25. Over that 20-year time, if you just put it in your mattress, you'd have $6,000. Now, that same $25 every month, if you were to put it in the bank is going to give you an interest of 1%. So you'd get $6,641 over 20 years. So doing the math, you've only made $641 and just giving it to the bank. Now you take that same amount of money and put it in the stock market. Now I say 12% here because the stock market generally returns 12% over time. That's calculating the ups and the downs of the market. You get 12% on your money. But playing it safe, I'm also listing 10%. Just what if it just went up 10%? And I say that because for the past 100 years, the stock market has gone up an average of 10%. So for the year. So looking at that same $25 with the typical market, you got $22,000 over 20 years. So the return of what your money can do based on it being in the bank or the stock market, you clearly can see that you'd be better off putting it in the stock market. Now, the other figures I have are like this $100 here. So you think, how much money would I have to make if, I wanted to put $100 a month in stock market in the bank just to save? $100 a month is actually equivalent for someone making minimum wage. So this is the 725. And after you do our strategy of how to save money and invest money, you'll see that this is going to be 10% of the monthly income that you'll have every month. So the $100 is somebody that's making $7.25. Now I go all the way up to $800, and this is how much you would be putting in and saving a month. And that represents someone that's making $126,315 a year. So It's not where it necessarily takes a lot of money, it just takes you being financially the mindset to save. So, just you really want to, the first hurdle, anyone who wants to save money and grow their money in the stock market or anywhere else, first thing that we have to do is we have to change our mindset. Now, here I am showing you a pair of exclusive. These shoes here have, I don't know how Michael Jordan does it, but he takes the same shoe, his original shoe, and he changes the color of that shoe. And based upon the color combination, the shoe has more value. So say you see this shoe that I'm showing, this shoe with the blue on the top. Now, had this been red and red on the bottom, now this shoe would have probably cost you $150. But because this shoe is blue on the top and the bottom, and the reason why I know this is going to be a $400 shoe. I know this because of my wonderful daughter. She purchased this $400 shoe. And I say, here I am preaching, invest, save your money, do the right thing. And my daughter is spending $400 on a pair of shoes. I have never had a $400 pair of shoes, or one shoe, two shoes, 8 shoes, $400. I can't say that, but I've never had a pair of $400 shoes. So I wanted to take the opportunity to show my daughter, this is what you could have done with that same $400. So $400 shoe could have gotten her 5 shares of Nike stock. At the time she bought this shoe, Nike was selling at $80 per share. So she could have gotten 5 shares. Now today, which I looked at Nike at the end of the year, Nike was closing out 2020. Nike was $141.47. My daughter could have purchased those 5 shares. And at the end of the year, or at any time that Nike was at the price that she wanted to sell, she could have, just even waiting to the end of the year, $707.35. So that's the money that she could have had back into her account, which would have been $307 extra that she would have had in her pocket. Now, she could have had Nike pay for her Nikes, but she bought the shoe and not the company. Even if she wanted the shoe and maybe not that color combination, she could have spent $150 on the shoe and had $150 profit and still had the $400 that she had in the beginning in her pocket. So, that's the misconception is we don't have any money. But we do. If my daughter has $400, then she could have invested in it. Then I'm sure we who work have money that we may be not spending the best way or not using wisely, that we can invest too. And then if you say, oh, my bills and I don't have enough, then hey, then maybe what we need to do is just take a look at, again, the mindset and how you're spending your money. What is it going to take to save? Now, one of the great books that I've read, and there's a book by George Samuel Clausen, and it's entitled The Richest Man in Babylon. Now, it's a book that's based on parables. So it's going to tell the reader his step-by-step formula on how to become rich. And I'm revealing it to you. These are the steps. Now, For me, my first step and my number one step is tithing. So I'm taking 10% of what I get and I'm paying that to the church. So step number one for me is going to be my most important step because I want to always keep something coming into the storehouse. And to assure that, I need to thank God with the 10% that He's given me. So my first step is paying tithes. Now, the step one for the book is to start thy purse to fatten. And really, what this means is to save money. Save at least 10% of your paycheck. So all you get, so if everything that you get, some of that is yours to keep, which is that 10%. So 10% is God's, 10% is yours, and 80% is what you're going to live off of. So once you start doing that 10% and you start building that up, the thing about money is like water. It flows to itself. So if you look at water and it's downhill, everything water is going to water. It's either evaporating going to water, flowing going down to water, but water is always in search of itself. And that's the same thing with money. Money's in search of itself. And to have it to attract money is to have money because money is trying to get to money. So first thing you do, start saving. Then once you start saving, you want to control thy expenditures. So you don't want to waste the money. You don't want to just put it in some get rich quick scheme or something that you don't know anything about. A guy told me he can such and such. Okay, but you don't know anything about it, and you want to give him your money so that he can spend it for you and waste your money. So you don't want to just the money that you save, you want to keep it, but not necessarily keep it, but you want to make it safe from predators. You don't want to just waste it. So you're gonna save it. You're gonna control it. You're not just gonna spend it frivolously on anything. Then you're gonna make it multiply. So by that means is you're not gonna give it to the guy who in a business that you know nothing about. You're gonna look at something that you know about, something that you find is profitable. And if you don't know anything, then that's where you're going to do another one of these steps. And that's going to be increase your ability to earn, which is at the bottom. So first three, save. Second, control it. Don't waste it. Third is make it grow. Then once it starts growing, you're going to guard that treasure again from the loss. You don't want to lose this money. Now, 5, 6, 5, it's more of own your own home. And that's something that you would look to do in the future. 6, ensure future income. So that's saying insurance. If you were to pass away, is there something in place that's going to assure you future income? So insurance is something that if I were to die, then we would have insurance so that we would have income for a certain amount of time. And then number 7 is increase the ability to earn. That's learn more. So that's if you wanted to learn how to pressure wash, you want to learn how to paint, whatever it is that you're doing it so that you can increase the amount of money that you can earn. So if you don't have money, first thing that we want to do again is 10%. We're going to pay 10% of what we get in tithes to God. That's going to keep money coming into the storehouse. Then once you have that money in the storehouse, you're going to take the other 10% and you're going to put it away. You're going to save it up, let it start accumulating. Once a year's time, you're going to look at it and you're like, wow, it really starts to add up. And then you're going to live off the other 80%. Now, we think it's hard to live off this 80% because, we're so used to just spending everything that we have. But what we'll find is that when we start living off the 80%, we'll start budgeting better. We'll start making wiser decisions on what we actually, want to spend our money on because now we have this 80. And so as that 10 is growing, you're learning, man, I really don't necessarily need all of this 80. Some of this I may be wasting. But don't, of that 80, don't, how do I want to say it? Don't lock yourself in and say, oh no, I don't want to spend it. No, live your life. Live your life on the 80 because you've put something away in the storehouse. So if you can live your life on the 80, not neglecting yourself, but understanding that you do need to save. And if you have extra, put some extra aside. So why we're here is because of my multiplying and how I like to multiply my goal and how I think you should multiply your goal. And that's what these little pieces of paper, stock certificates, you know, and these have generated wealth over the years. And the big thing is people don't know is how did this paper get worth and how does it give you money? And like most things in the United States of America and all things European, most things start with what? Slavery. So, you know, you look back and you say, you know, the mode of transportation back then was a ship. And so there wasn't like you could just go buy a ship. You had to build a ship and you had to build that ship from the ground up. And so what would happen is, you know, if you're the king and the king, you can afford to finance a complete ship. But if you're not a king and you're just a businessman and you want to finance the ship or get money to build the ship, then you got to come up with something. And what they came up with was stock certificates. These are the certificates that they would write to say, okay, John is going to build a boat. This boat is going to participate in the triangular trade, which is the trading of African slaves, spices, and goods from China and India. So this triangular trade is being funded by the people at home who are trying to cash in on this boat. So they're saying, okay, John's building a boat, and if you want to be a part of the boat, however much money you give me, we will give you a certificate to say that when the boat comes back, based on how much you gave, you will get part of whatever it is they're bringing back. So say, for instance, you know, it's just like today, you know, you're saying, okay, John, who's building the boat? John's going to build the boat. All right. Well, when is the boat expected to come back? All right. How big is the boat? So that's going to tell you how many goods are you going to be able to bring back. Who's the captain? Is the captain crazy? You know, is he like the President Trump, like leading the ship? How is the captain? Who's running the ship? So that's like, you know, CEO and management. But what's the quality? Are there just drunk people just building this boat? You know, when it get in water, it's going to be shaky. So all of these were the questions that they were asking about, am I going to put money in to building this boat? And they gave their money. And so you give your money, you have this stock certificate, and you waiting on the boat to come back. You know, you just like, Lord, when John them coming? Boy, I can't wait till whatever we get come back. And he's sitting there, and then next thing you know, you're running out of money. Times are getting hard. And you saying, man, I got this stock certificate for when John comes back with the boat, but I need that money now. So you say, I paid $100 for this certificate. Let me go see if Paul will buy this certificate from me so that I can get my money back, and then Paul can wait on John to come back with the boat. So you go to Paul, and Paul was like, oh yeah, John. Oh yeah, John will be back. John should be back. Yeah, I'll take it off your hands. And so Paul gives him $100. Now, in that case, he didn't make anything. He didn't lose anything. But what he really wants to do is say, okay, I'm going to sell it to Paul. I know John is going to come back, but I just can't wait. So I'm going to sell it to Paul for $150, right? Paul say, Okay, I'll give you 150. So now he done made $50 because Paul would take it off his hands for 150 and he only paid $100. So this was just still building the boat, waiting on the boat to come back. These are the early startings of it. And the guy can't wait long enough for the boat to come back. So he goes to somebody and tries to sell his certificate. Now, in this case, the boat was good. We think John's coming back. He sells it. He makes more money, $50. Well, what if John's a drunk and John probably ain't coming back? So you're going to say, Paul, you want to buy my certificate for $100? Paul going to be like, man, no, John ain't coming back. I ain't taking that. And somebody be like, well, you know what? John, he might come back. I'll give you $25 for it. And you be like, what? $25? Man, I need the money. Here you go. And so Paul don't know if John gonna come back. If he is, if he ain't, but it didn't cost him but $25. And say John comes back, then he knows he's gonna get his money. But if he don't, he only lost $25. So the boat finance, you get the certificate. As a person who can't wait to get the money and needs somebody to just buy it right now. And so that starts happening a lot. People just can't wait. And so they was like, well, you know what? I don't even have to wait on the boat because I can keep selling these certificates. And based on if the boat is coming back or how people feel about the boat, we will just exchange these certificates until the boat comes back. And so I am running out of time and I with my Zoom. But all right. But so
You can extend your time, but
I know. So they're waiting on the boat to come back. They start exchanging the certificates. Now, what happens is some people, and again, reading and writing is not common. So it's not like everybody can just write a certificate, but fraudulent certificates come out. So people start writing certificates and it ain't even a boat. So then what happens is that creates a need for regulators and that creates a need for a market. So there's a place where they're just going to be trading these certificates and there's going to be a regulator to make sure that these certificates aren't fake. And that's the creation of your stock market today. The same exact thing is happening. Instead, it's just, again, it's just not the boat, it's the company. Who built the boat? Infrastructure of the company. When the boat coming back, what's the time horizon of this company? When do they think they're going to be making this product? When are they going to be selling this Kim Kardashian line of of makeup? When should they expect to see money coming back? So we use all of those same type of things for the boat in Wall Street. And that's what Wall Street is. Wall Street is the place where they started exchanging those certificates, where the guy's not, you can't wait for the boat to come back. Those are the same type of certificates that are here, except they represent the actual company. Now, so what would happen is because people are coming to get the certificates, other people are coming to sell the certificates, it becomes like an auction. 55, 45, 99, what we got 5 over here, 4 over here, 4 over here. But except the market in Wall Street is so fast is that when you see 55, somebody's buying 55. Every order that's coming up, somebody is actually buying. So Wall Street is just an auction block. And what's being auctioned are those certificates. And they call those certificates stocks and they call them shares. And what does the buying certificate look like? This is a stock quote. So remember when I said my daughter purchased shoes and she could have sold them for $141. Well, this is the Nike stock quote here. And if we look at the top, we will see New York Stock Exchange Nike 139.59. So at the end of the year, it was 141. On January 1st, at the time that I took this, which is at 1:26 p.m., Nike was at $139.59. So she would have lost what's that? $5? A little more than five, maybe $10 from what she would have had she not sold. So this is a quote on Nike. And I'll go through another one and just so you can see the difference in the actual companies. This here is Delta Airlines. So another stock quote. And the next one I'm going to show you, we're going to walk through from top to bottom. And this is AMC Entertainment Holdings. So AMC, right now, no one's going to the movies. So this stock is just really has been going down because no one's going to the movies. So if we look at the top, I'm going to go here, the New York Stock Exchange. This is the place where you could go to buy this actual stock on the New York Stock Exchange. Consumer Cyclicals, Hotels and Entertainment just tells you the category that this stock would fall into. AMC. Now, the name of the company is AMC, and this is an abbreviation. This ticker symbol is an abbreviation for that company. Now, when the company starts the process of becoming a stock, they get to pick what ticker they want. The abbreviation started because there was a thing called ticker tape, and it wasn't long enough for you to put the whole company name, so they had to abbreviate it. So here we see that AMC and the price that you would buy per share, the last trade was $2.14. So if you wanted to buy 100 shares of AMC, you have two places to look. You have a bid size and an ask size. So the bidding is somebody's on the other end saying, I'll buy it. I'll buy it. The best person is saying, I'll buy it for $2.16. There's another person saying, I'll sell it for $2.17. So I'm asking, what you asking? I'm asking $2.17. So if you want to buy it from me, I'm asking $2.17. Well, what you would buy it for? I'm bidding $2.16. So now what you and I are going to buy on. So when they're asking $2.17, we got to buy at the highest price. So someone else is asking $2.17. They're saying, do you, Brad, want to pay $2.17 for this? That's what they're asking. And I'm saying, yeah, I'll buy for $2.17. So it's asking, this is how much you would buy it for. Now say I wanted to sell it, I would sell it for $2.16. So let's go back. So right here, we see the AMC during the day when it opened, it was at $2.09. So that was Friday. Thursday, it closed at $2.05. So what that means is the market opens up at 9:30 and the market closes at 4 o'clock. So at 9:30, when the market ding opened up, it was already at $2.09. So let's do the math here. So let's say you purchased on Thursday, you purchased 100 shares of AMC for $2.05. And there were 100 shares, it would have cost you what? $205. Now, the very next day, AMC opened at $2.09. So that's a 4-cent difference of where it opened and closed. So you've already made 4 cents. But not only have you made 4 cents, you've made 4 cents times 100 because you've made it 100 times because you have 100 shares of it. So you made $4. Now, during that day, AMC went from $2.07 to $2.21. So it opened up at $2.09, but throughout that day, so here, if we look to the right, this is a line chart. Throughout that day, it went up and down, and it went from $2.07 to $2.21. So if we do the math, we could see that the highest amount that you could have made would be 16 cents, which is 16 times what? 100, right? So $16, right? So from one day to the next, you could have made $16 if you had just put $200 into the stock. Well, what if you had put $2,000 into that stock? So in one day, if you had sold at the highest point, you would have made $160, right? Now, say you bought this on Thursday and it just went up, it goes down, it goes up, goes down, and you don't sell it, in your account, you'll see that 100, your account went up $9. And it'll show, okay, for the day, your account's up $9. But it's not money until you sell. So, key things that you'll need to know on a quote to get started is going to be the ticker. So you got to find out what's the company. Now, if I want to invest in Netflix, say, okay, what's Netflix stock symbol? Find the ticker. You're going to know the bid, the ask. Bid is what you're going to sell at. Ask is what you're going to buy at. The spread, this is where the people make the money. The difference between the bid and the ask, those 0.99999 cent, sometimes that's what the man who's in the middle doing the trade saying, oh, you can buy it? Okay, I'll take it. Yeah, I got it. That's what that man is making to do. The last thing that you'll look at is volume, and that's the total number of times that a transaction is happening. How many times is a bid, is somebody buying and selling of this actual stock? So, again, AMC at 214. Now, you say, AMC at 214, what's making it move? Like, what's making this stock prices go up? Well, number one thing is supply and demand. People are trying to say, okay, AMC, it's the boat. You know, is this boat going to come back? Are people going to go back to the movies? Will AMC make money again? Are they going to start making money? Because if they make money, then that should pass on to the shareholders. So you say, will it make money again? There are, I think that's the biggest question, and a lot of times it gets people caught up in investing stocks because they want to know, how do I know what's going to go up? You know, if it's going to go up, if it's going to go down, I don't want to lose all my money. How do I know? And the biggest answer is really nobody knows. The people that claim to be professionals or are professionals, I mean, they're making educated guesses, just like, you know, we may be making uneducated guesses now, but they're making educated guesses, and no one really knows for sure. There are three approaches that people use. They use, one's called Technical Analyst, one's called a Fundamentalist, and then the third is Random Walk. So this first one, the Technical Analyst, all this person is doing is just taking a look at the chart, saying, okay, it was this price at one point in time. They're just looking at how that chart looks at whatever price it was bought. It's a line chart, and they're looking to see if it looks a certain way, then the stock is going to go down in price. If it looks this way, it may go up. And all they're doing is just looking at the actual charts. They don't care about what the companies actually underlying what they do. They main thing they're looking at is how does this chart look. The fundamentalists, they're looking at it, okay, this company's been making money, they have these assets, they're looking at the balance sheet, they're looking at the growth of the company, the news, they're trying to take all of the information in to see which direction it's going to go. Both of them are trying to find a stock that, oh, it should be worth more than this, or it should be worth less than this. I think one of the biggest misconceptions is that you only look at stocks going up. Well, stocks have two sides, they're going up and going down, and you can actually make money on both. So the last theory that people use is the random walk theory. And what the random walk theory is experts feel like it does not matter what you pick. As long as you pick something consistently over time, the market is going to do better. So the random walk theory always brings up, for me, there was a test or a project. And what they would do at Wall Street is they would bring in monkeys, blindfold the monkeys, and have them throw the darts on the Wall Street Journal, which is the back of the newspaper, to pick the stock portfolio. The monkeys competed against the experts. Now, why they had to blindfold the monkeys, I don't know, because I mean they could have just threw it, but they so-called blindfold the monkeys, and the monkeys threw the darts, and whatever the monkey threw the dart on is what they bought. I think it's either 9 times out of 10 or 10 out of the 10. The monkeys each year outperform the experts. So it's not that you have to be an expert. It's just you just got to get in the game. You just have to do the do. So again, I said that there are two sides. There's a bull side and a bearish side. So there's a side that's wanting the stocks to go up, and there's a side that's wanting the stocks to go down. An easy way to remember the side that wants the stocks to go up is you think of a bull, the bull's horns are up. And if you think of a bear bears down on you. So there are two ways, two sides, bulls and bears. And if we have time at the end, I can explain, if that's one of the questions, maybe write it down on how you can make money on the stock going down. So this is where you get started. This auction process, in the past, in order to participate in this auction process of buying stocks, you had to get permission. You had to go see a broker. You had to go to the brokerage house, and those people would charge you what? A commission. They would charge you fees for you to say, okay, I want to go buy this stock. Well, now it's 2021, and you no longer have to have permission. You no longer have to go to someone to be able to participate in this auction process. Now we can go to Cash App, Stash, E-Trade, Robinhood, Webull. There are many places where you can go now to get access to the app, to the auction process. Basic information that you'll need. If you're a minor, you need your parents to sign up and get you a miner's account. You still can have control over it, but until you're of age, you would need to get your parents to do that. You'll need, social security number, financial information. If you're not working, that's fine. Just put on, that you're not working. If you're a novice, it doesn't matter if you're a novice or an expert. Just be honest with what you answer and open up the actual account. After you open that account, you're gonna find your stock symbol, and then you're gonna look and see the ask, and you're gonna have enough money to buy however many shares you want, and you're gonna put in two types of one of these two orders. Now there are multiple orders, but these are the two most common orders that you would need to know. First order is a market order, and the second order is a limit order. Now, a market order guarantees execution. And what does that mean? So that means that, let's go back to this stock quote. All right. So the market order in this case for AMC is saying, I want to either buy it or sell it right now. So you're going to get at whatever that next price is on this trade, on this ticker. So right now, you again, let's go back. We're asking $2.17. There are 2,100 shares of AMC listing right now. So somebody said, hey, 55. I got 2,100 shares of AMC at 217. And so they said, okay, now you put in a market order. If there are 200, 2,100 there, you're going to get your fill at $2.17. So that's what you buy it at. But say, you know what? I don't know if I want to pay 217 for this order. I think it's going to go down to $2.05. I'm going to put a buy limit. I'm going to say that I want to buy it at $2.05 because I think it's going to go down and I don't want to pay that much for it. So you're guaranteed that you won't buy it for any more than $2.05. However, you're not guaranteed that it's going to go down that far so that you could buy it. So you're guaranteed your price if it goes down that far, but you're not guaranteed that it's going to go down that far. Now, again, the market order is saying, I want it right now. 55, I want it right now. I want it right now. Whatever the price is, I want it right now. So you're guaranteed that somebody's there on the other side to sell it to you right now because they have to be. That's what the business is, to sell it. So somebody's right there. You're buying it right now. That's the market. You're setting a price. That's a limit. So you're going to go in. You're going to open up an account. You're going to find your ticker. You're going to find it. You're going to buy it. You're either going to put a market order in or a limit order in, or you may even use Cash App. And Cash App has a great feature where if you had $1 in your account, you could purchase a fraction share of that stock. So say AMC again, it's $2. You only have $1. Well, Cash App would let you get 50%, half a share. And every time it would buy you, if you were just putting a dollar, if it's at $2, it's going to give you whatever percentage you put in. And that's Cash App. So I like Cash App because it's another way of having small amount of money, but being able to invest. So this is it. This is your opportunity, which is now, to go and invest. I like this saying, the best time to plant a tree was 20 years ago. The second best time is now. You two are young, so if you start now, you'll be able to buy daddy a Ferrari 2 times over. So thank you for participating. Thank you for listening. What questions do you have? All right.
What does SSDD stand for?
It stands for,
talking about the boat.
It stands for same ship, different day.
Okay.
So, and what I mean by that, the business, it's the same thing. So when you're comparing a business to the boat, it's the same ship. It's just a different day. What else do we have?
So for a person who's investing for the first time, what would you say would be the best strategy? Do I go straight to the Wall Street Journal, or do I find, how do I find a stock that I would be interested in? Like, where should I start?
Great. I think the best thing that you should do is buy and try to invest in stocks, products that you use. So if you use hair care products, if you use Dawn dish detergent, the main thing is to find the items that you buy, you put money in, you believe in them. So if you believe in them, I think that you tend to think that other people believe in those products as well. And you look to see, okay, who makes this product? Who owns that company? Does that company have a stock? And once you do that, you say, okay, that company has a stock. Well, what is the price of that stock? And then you go from there. Because if it's $100, then depends on how much money you have to invest. But I say the first thing is to invest in things and products that you
That you
use.
use.
Yeah.
Thank you, sir.
Mm-hmm. Anything else?
The technical analyst, fundamentalist and random walk. What are those three types of?
There are three type of investment strategies. So how they pick what stocks they want to invest in. So the technical analyst, he finds the stock and he's just looking at the chart. On that chart, what it's showing is this is the price that it went. So you can go from one day. So let me go back here and we will go back to a chart. So here is a chart. This technical analyst, right? So can you see the chart on the right of the screen? Yes.
Yes.
Okay. All right. So at the top of this chart, we have 1 day, 5 day, 1 month, year to date, 1 year, 5 year, and since inception, which is all, or however long the stock has been in existence, or however long they can show you on whatever platform you're doing. So here, the technical analyst is going to say, so this point is COVID-19. That drop that you see in March is COVID-19. This is when the stock sell-off happened. And what you see is a gradual increase of that price over time. This purple at the bottom is the volume. So that's the number of shares that are being traded at a particular time. What the technical analyst will look at and say, okay, this chart looks like it's gonna break out right in certain spots. And let me go back and I'll show you if you can see it. So the technical analyst is taking that same chart and breaking it into pieces, right? And if it meets these patterns, right? So like this is a double tap M. So if it meets that pattern where it goes above that line, all they're looking to see is where this shows up in that chart from that stock quote. And that could be a year's time. It could be during the day. However, the time horizon that they're investing is what they're going to look at. Fundamentalists are just looking at the balance sheet to say, okay, this company has this amount of money. They got inventory. They're just going to look at the income, how much they're selling, the overall structure and balance of the actual company to determine if they want to buy it, if the company's going to go up, if it's going to go down, and be like, okay, I'm going to buy some New York company. Well, New York and New York went out of business because if you looked at their sales, they were going down, and COVID-19, they really couldn't recover from that, so they went out of business. Random Walk, they don't care. They're just saying it does not matter. You can pick any ones you want, and you're gonna see a good return. Or fundamentally, if you're diversified, it should all average out and give you a return, make you some money. So 3 investment strategies. What else do we have?
Okay.
What would
Can
be
you explain
Oh, go ahead, Jalen. I'm sorry.
Can you explain the Bears versus Bulls thing again?
So bears and bulls, two sides of the actual market. So what we looked at is I buy AMC, it goes up $2.17. You know, I buy it at $2.17. It goes up, you know, so you wanted to go up to infinity, but whatever it goes up is what you would make. So that's bulls. They want the market to go up. They want the stock price to go up. Bears want the price to go down. Now, how do you make money when the stock goes down? You borrow money. You borrow the actual stock. So let's go back to Delta Airlines. All right. So when we're looking at the chart over here, we see a 1 day again. This is a 1 year chart of Delta Airlines. At one point, Delta Airlines for this year was at 60. Let me go back. Was at $60. So if we see the chart here, Delta was at $60. Now, people to make money on the downside said they probably didn't know Corona was going to happen, but maybe they was like, man, I am in China and I know China is falling apart and it's going to spread throughout the world. And so they say, you know what? I am going to do something to take advantage of the market going down. And I am going to do what's called a short sale. And that short sale. So they say, instead of me getting the Delta stock, this is what I'm going to do. I'm going to go to the bank, to the investment broker, and I'm going to ask them to let me borrow the stock. So I'm going to go and I'm going to say, yeah, let me borrow 100 shares of Delta stock. Right? At the time, it's trading at $60. So they're going to say, okay, that would be $6,000 worth of Delta. And you say, right. You say, but you know what? Don't even give me the shares. Just give me the money worth. So they say, all right, well, we'll put the $6,000 in your bank account. And you say, cool. All I got to do is give you 100 shares back. Now, that's the key. I'm borrowing the shares, but I don't want the shares. I just want the money. So you say, all right, I'll just give you the straight money. But the person that's saying, I want my shares back, though. I don't want no money. You need to give me my Delta shares back. You say, cool, I'll give you your Delta shares back. So you paid $60 is what it's going for right now. Well, lo and behold, Corona hit. You see this dip down here, this deep dip where under the 5 day, right on April, Corona hit. And the shares look like they $20 a share, right? You say, you know what? Man, let me go ahead and get this man his shares back. And you go buy those shares. And you say, they cost $20 and I need 100. So man, that's gonna cost me $2,000 to get these shares, right? You take your money, $2,000, you go buy 100 shares. What does the man want? He wants the shares. Give him his 100 shares. What do you have left over? $4,000. Because that's the money that you borrowed. You borrowed the shares, but instead of getting the shares, you got the money. And then you took that money and took that 6,000 and bought 2,000 of those shares to give him back $2,000 worth, which was 100 shares, to give it to him back. So you hoping that when I borrow this 100 shares at $60, the stock price goes down so that I can buy those shares for cheaper and make the difference on the money. So that's called a short sale. And that's how you make money on the down. And the down is for the bears, they bear down, and the bull is for people who wanted to go up, horns up. Did that help? All right, what else do we have? We got, I think we might have to end it in a couple of minutes here. Is there anything that you need, Lakeisha?
I was asking, of the 3 strategies, what's the best strategy to use for a beginner investor?
For a beginner investor, I say random theory.
Random theory, okay.
Because again, you're not going to know how to read the charts yet. And unless you're a CPA, you may not know what
Okay, I'm listening, babe.
yeah, but you may not know what the inventory and what those fundamentals actually mean. So the most important thing, this is like chess. If you ever learn how to play chess, the most important thing is to play the game. So to find things that you invest in already, because you're buying them, you're using that product, and then own the company.
Okay. Cool beans. Thank you.
Anything else? Honestly, now this is the honesty part, and I'm going to ask each one of you. I want you to come off mute and tell me, based on this conversation, do you think you could go open a brokerage account and make a trade?
Absolutely. I think I could.
Jalen?
I think. Oh.
Amari, whoever?
Like on my own?
Right now, right. On your own, do you think you could go and open a brokerage account?
I feel like I could go in there and wait.
I mean, it's honestly no. Yes,
Yeah,
no. Okay, great. How about you, Jalen?
I would need some help with it,
Okay.
but I would, I guess.
I feel like I could get there. It's just gonna take a little bit more to get there.
I agree.
Okay, can I say something? I think for me, because you said that as a beginner investor to invest in things, invest in the products that you use. So let's say hair care. So if I wanted to start investing and I know how much money I spend on, can't say canvas products, then I can go and do some research to find out if they're a publicly traded company. And then from there, I can see if they are, how much their stock is, and then I can kind of start there as an investor. So that part sounds very easy to do, but it takes research on my part to do, because it's work that I would have to do in research, right? Like,
Right.
I just can't say I'm going to go invest in Amazon. Well, first of all, I need to know who I'm investing with and the company that I'm investing with, right?
You don't have to know that. You can invest in any company. For
You
me,
can know some background information about them.
sometimes,
right?
I mean, for me, I look at it and I use a combination of all 3 of those strategies. One thing is I try to not just find things that I personally use, but I also try to find things that may be trending. I try to look at certain things like, okay, this product or this company, like Zoom. This is a company that's, probably going to be growing. And I try to anticipate, what's going to be hot, what's going to be selling. Then I also look at, okay, although it's hot and it's going to be selling, where is it at now? So is it at its all-time high? Like, am I going to pay too much? Is it, do I think it's going up? Do I think it's going down? So I'm going to look at the charts as well to see how is this trending. Like, if I look at this Delta Airlines, I see that this stock is trending up. It's taken it a long time, but since March, when the crisis hit, yes, it goes up and it goes down. But if I look at the pattern over the course of that year, it's slanting up. So it looks like it's trending up.
And do you think that trend is going up because the airlines have opened back up from when they were really shut down and people stopped traveling? Now that
Absolutely.
the vaccine is out, you're seeing an increase in travel.
Absolutely.
So do you think that's what's pushing that price back up?
Absolutely. And you have people who feel that way as well. So again, supply and demand. So how do other people think Delta Airlines is going to do? And they're looking just like we are, like, okay, well, things are about to open up. Looks like people are going to start believing more into this company. And, you buy it and you hope to get it at a good price and that it continues to go up. But
so as an investor, you really have to pay attention to the environment. You have to look I'm talking like the economic environment and how consumer spending is being impacted, because you keep mentioning COVID and that dip in COVID. So is it safe to say that as an investor, you have to look at the economy and look at the different variables that are happening around the economy to be able to make some smart decisions on investment?
Right. For some stocks, see, what happens is that you can have what's called defensive stocks. So those are stocks that no matter what's going on, it could still have some stability. Things like Walmart, when it hit. I mean, again, what's happening when it all is going down is that there are people that this is all they do. I mean, they're trading billions of shares at a time. And so any movement up and down for them and any uncertainty, they're losing billions of dollars. So they have to sell to get out of those positions so that it doesn't just keep going down and they're losing billions of dollars. So still there are companies like alcohol that are defensive, meaning that Walmart's, and there are some companies that regardless of how bad it gets, they're still going
to go up.
Not necessarily go up, but they're just not going to be hit as hard because they're fundamentally strong. People know that they're going to be around, but there are a lot of companies that people just know that if you can't be face to face, they can't generate revenue. They can't generate income. And if they can't do that, then how is the stock? How are they going to make money? How? So then the price will go with that. But it's the best thing to do is something that's called dollar cost averaging. And that is you buy consistently over a time period. Sometimes you might catch it when it's $2, 20, but up and down, and you're just consistently putting your money into that investment. If you look at the average over time, then it's going to be lower, tends to be lower because you're buying it up and down, and it's called dollar cost averaging. But each stock is going to be different. Like Delta Airlines is in transportation, so the fact that everything was closed off did have an impact on it. But Zoom, the fact that things were closed off, it had a positive impact on that one. So it's just going to depend on what the actual product is.
Gotcha. Thank you.
Mm-hmm. So the next thing I think we need to do is we need to have a Zoom session where we are going to open these accounts. So what we'll do is we will walk you through. We're going to go. I use E-Trade. So, we'll probably just all use E-Trade. and then we will go through, and we're gonna walk you step by step and open up the account.
All right, bring
Will
your
you go ahead?
monies. No, I'm
No,
just
you don't have to bring the money to
I'm
open the
just
account.
joking. I know I'm just joking, man.
You just gotta open the account, but eventually you're gonna need your money. Thank
All right.
y'all, man. I appreciate y'all
Good job.
for this inaugural the inaugural kickoff for Wealth Elevations, man. I hope we get rich.
All right, man. Bye.
Bye.
Thanks, girls.
All right.